What's going on, everybody? Welcome to the inaugural episode of Tax Talk. I'm your host, Jared Plon, and this podcast is going to be focused on one thing: small businesses. Specifically, looking at major issues impacting small businesses, and more importantly, finding solutions to those issues. It's one thing to complain, get frustrated. It's a whole nother thing to get out there and actually provide some solutions that help business owners, help families, and help people move with their lives and push forward. So, without further ado, let's get episode number 1 underway. Let's go. What are we talking about today? Are you tracking your cash flow? Did a little bit of research in conjunction with the blog post that is associated with this. I'll put the link to that in the description below. 82%. Pretty high number. That is the number of businesses, according to recent research, that end up failing due to cash flow issues. That is a huge number of businesses. Now, I don't know, the articles that I looked up didn't specifically say if that was kind of, taking into consideration the last couple of years due to government policies kind of impacting that. I know in the past I'd seen, around 50 to 60%, so maybe it's a bit higher based on what's happened over the last couple of years with lockdown policies in place. But nonetheless, even if we're sitting at 50 to 60%, we're talking a good number of businesses here that need to pay attention to their cash flows. It is vital to the business surviving. You could run into all sorts of issues in a number of different industries, but cash flow is definitely one that will impact you no matter what business that you decide to open or what line of work that you're in. So with that being said, we're going to look at 5 big tips that business owners should take on, and some things that you can do to manage your cash flow and to better prepare your business for some of those tough times. Because we all know for the last couple of years that they are bound to happen. So, number 1, do you have a budget? I know most people don't like doing budgets. They're tedious, they're boring, they're time consuming, they're not a lot of fun, but they're important. And if you check out that blog post, I put on a little snippet of a cash flow statement there, and it kind of highlights some of the areas that make up a cash flow statement. And the first one simply being net income. So most business owners are fairly familiar with that statement. They know the ins and outs of their revenue and their expenses and basically what their bottom line is. But do you have a budget in place to manage that net income? Are you tracking your expenses on a monthly or a quarterly basis to ensure you're meeting the targets that you lay out for yourself? What happens if supplier prices go up? Is that reflected in your outgoing pricing then? These are all things that might sound small in themselves, but they can really add up and have a big impact on your net income, on your bottom line, and that number 1 aspect of that cash flow statement and your overall cash flows. So if you haven't put a budget into place, I suggest you have a look at that. It doesn't need to be overly complex. You could work off some existing reports that maybe your financial bookkeeping system already prepares. That way you're not having to rewrite the whole script on things. But putting something into place that you can monitor on a regular basis is going to give you that feedback that you need to ensure that your business is on the right footing. So, number 2, are you protecting your credit? So, a lot of times when business owners start to struggle as far as cash flow goes, they tend to start pushing payments back. A supplier will give them 60 days, so they push that to the brink. That doesn't give them the lead time that they're looking for, so then maybe they start making some late payments. Maybe they start missing some CRA remittance payments, specifically payroll. What happens then? Well, you don't pay your suppliers, they stop giving you goods. Stop paying CRA, they start charging some fairly significant penalties. And as this kind of starts to snowball out of control, your credit goes down the tubes. And I think in today's age, trust, credibility, credit, all kind of tied together. And if that takes a hit, your business is going to take a hit, and it could be really difficult to recover from that. So, what do? Cash is tight. You owe the supplier some money. CRA payments are coming due. You can live off of, maybe short-term lines of credit, that type of thing. But obviously that's not a long-term solution. You need to be proactive and make sure that you're communicating with your partners. Let your suppliers know that you're going to be late making some payments. Maybe you can negotiate some different terms, add on a little bit of interest. Maybe you can bide yourself a little bit of time in a tight period, and that way you can kind of revisit things and make some adjustments going forward to preserve that cash flow. But by doing that, you've taken those steps initially to protect those relationships, to allow you to continue that business onwards. Number 3, when was the last time you counted inventory? Now I know what you're going to say. I provide a service. I don't really have any inventory. But that's not the case either. Everybody's got office products. Everybody's got some sort of consumables, small tools. Every business has some sort of little item that they keep on hand that they need, regardless of what line of work you're in. And if you're not keeping track of these things, they tend to get lost. You might have a whole bunch of them on hand, you just don't know it, and then you keep buying new ones just because you're unorganized and you can't find anything. And all these little things, they start to add up. And if you had that budget early on, you might be able to start seeing these things. You have a bit of a baseline set up that says, okay, these are the office products I need. This is the fuel I need. This is, whatever it is. And then if you start seeing that things are, not lining up, well, maybe it's time to take a look at some of the processes in place in your business and make sure that you're being accountable to yourself, your employees are being accountable, and you're keeping track of what's going on. And this is even more important if you are in the goods business, if you're selling widgets or whatever the case might be. If you've got materials, inventory on hand that you need to mark up, sell to customers, you need to have a good idea of what's going on there. For some businesses, this is, a manual process. Maybe it's a smaller business, not a whole lot of things go in and out. But then it's, the flip side, you get into retail or, restaurants, something to that nature. And, you need to keep a tight track on these things to ensure that, you're hitting your margins and you're not letting too much, either go to waste, or if something maybe does become obsolete, that you're hitting it right at that right point where you can put it onto discount get it out on clearance as opposed to just letting it go right into the scrap heap. At least you're recovering something on it and, not taking a full-on loss. So always keep those things in mind when you're dealing with consumables or inventory, anything of that nature. Number 4, where are your reserves? Like I mentioned earlier, if we've learned anything for the last couple of years, government policy can really shift business expectations like that. You might be going along, things are good, industry stable, economy's reasonably good, but you're in a good line of work and the cash is flowing, and then all of a sudden stop short. If you're consistently planning for these highs, not expecting any of these cash lows, you're going to run into problems. So that's why it's important to have some reserves on hand. And again, it kind of stems back to that early discussion. Again, with the budget, if my cash flows are up here and then all of a sudden we've got a dip, whether it's due to government policy, whether we've got a recession coming in, whatever the case might be. Maybe a supplier, a customer can't pay us for a little while, and that translates into a bit of a cash flow issue. You got to plan for these things. It might not be practical to have 6 months cash on hand to cover expenses, but maybe even start with 1 month and try and build up from there. Set some easy goals to obtain and then kind of build up from there. And then that way, you've got a plan in place. If things get a little bit lean as far as cash goes, then you've got a bit of a fallback instead of having to rely on, strictly that line of credit financing as interest rates go up. That short-term debt's going to get a little bit more expensive than it was a couple of years ago. So, number 5, who is your accountant? So typically with, a standard financial statement that most businesses get, we don't even produce a cash flow statement. I know some bookkeepers will kind of go down that road with clients, but that would probably be a more, involved bookkeeper, and I don't think that situation happens all the time. So I'm guessing for most business owners that cash flow statement, it's just never seen. So with the financials, gets done by our office once a year. We could do that cash flow statement once a year, but does it provide you with a whole lot of value? It's debatable. To me, the value in the cash flow statement stems from looking at it on a regular basis. Maybe monthly is a little bit too much for your operation, but quarterly could be something you shoot for, even semi-annually to start with. And then that way you can start to see some of these trends of, maybe there's a bit of seasonality to the business, or there's just certain periods of time where, revenues are flowing a little better, maybe collections are a little bit easier to come by, and you can start to predict things a little bit better. And it'll, all tie back into that budgeting process and just being able to see that whole picture. So that would be something to kind of keep in mind if you've kind of got your business on a good track and you want to start exploring some other options for, preserving your cash flow, maintaining, some of that hard-earned wealth that you've worked to create in that business. It's to, implement some of these cash flow ideas to better protect yourself. So in closing, just want to throw out this abbreviated quote. I believe it comes from Benjamin Franklin, that it says, the only things certain in life are death and taxes. And if you kind of think about it, cash flow issues are similar, but there is one saving grace. If you take the time to prepare your business, to plan ahead, to implement some of these ideas, you can take steps to preserve your cash flows and avoid becoming one of those statistics and end up in that 82% category. need someone to help you out with this, feel free to give me a call, 403-343-7707, or reach out to me on my website, jaredpallon.com. And I'd be happy to, discuss your specific business situation with you, what we can do to manage your cash flows and preserve your wealth. Hope you guys got some good value from this initial podcast episode. Hope to talk soon. Peace for now.